I made $37,000 in the past week trading while only taking 3 trades. The most important concept that has helped me achieve these results and change my trading forever is price action. In today's video, I'll explain to you the 5 most important price action rules that, when combined together, made me a consistently profitable trader. And then I'll show you real trades that I took in real time to help you solidify this concept. Let's get into it. All right, so today we're going to talk about some price action secrets. Price action is one of the most important things you have to understand when it comes to trading, no matter what strategy you trade. So the first thing that we're going to talk about when it comes to price action is number one, price control. That is very simple. We're going to be looking at the difference between buyers and sellers, who is in control of price at this very moment. Second, we're going to be looking at true/false breakouts. This is very important in understanding if we're going to be continuing the trend or we're going to be having a potential reversal of the trend. Number 3, entries. Entries is very important as well. I'm going to go through one of my favorite entry models when it comes to trading that I use almost every single day. Number 4, candlestick speed/momentum. Understanding the candlestick speed and when to take a trade versus when to not take a trade is very important, especially when it comes to trading options. When we're trading options, what we look for is momentum, so that's very important. And I'm also going to be talking about the last leg of a move. This is an important concept that I don't talk about often when it comes to trading, but it's something that I use and probably most of you guys use as well, but you don't understand that you're using it. So I'm going to describe exactly what the last leg of a move means and how we can use this to our advantage. So with that being said, let's go on to price control. So the first thing that we're going to talk about is price control. And really what price control means is that who is in control of price? Are we in an uptrend, meaning the buyers are in control? Are we in a downtrend, which means the sellers are in control? Are we in consolidation, which means the buyers and sellers are stalling? And that really just means that price is in what's called consolidation, where neither the buyers nor the sellers are in control of price. So the first thing that we have is really split up into 3 phases, and you'll see that's kind of the theme of what I'm going to be talking about today. Is everything split up into 3. So the first thing that we have is an uptrend. As you can see here, we're making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You can clearly see that we're in an uptrend. So in this case, what we have is the buyers are in control. Next, what we have is phase number 2. And phase number 2 is consolidation. So you can see in this case, we're making highs, we're making lows, we're making highs, we're failing to make new lows, we're failing to make new highs. So this is what's called consolidation. And consolidation means that nor buyers nor sellers are in control, usually meaning that we're in a ranging market. And then on the third phase, what we have is now a downtrend. You can see that price is making lower highs, lower lows, lower highs, lower lows, and we're just continuing towards the downside. And this is when we can clearly see that sellers in control. So as you can see here, it's pretty easy to see on a line illustration. Let's see what this looks like from a chart perspective. So right here, you can see we have a chart illustration of what price control looks like. And this is a more realistic example of how price is going to operate. It's not always going to be perfect. It's going to look a lot more like this. So you can see phase 1, what we have is continuation towards the upside. So we're building up these higher lows, we're continuing towards the upside. So this is clearly what's defined as an uptrend. So now you can see price is now continuing towards the upside. And what we have here is we start consolidating. So this is really phase 2, where buyers cannot really get above this key high, sellers cannot really take it below this key low. So we're consolidating in this general area. And then finally, what we have is phase 3. So you can see price finally pushes towards the downside. We actually break outside of this range, and now we're actually in phase 3, where now we start continuing back towards the downside. Now you can see we're clearly in a downtrend on price. So right here, you can see this is what price control looks like. We went from a bullish trend to consolidation back into a bearish trend. Now let's go into an example of where price is in an uptrend, consolidation, and then we continue in the original direction of the trend. So right here, this is our second example, and as I mentioned earlier, it's going to be split up into 3 phases. So number 1, what we have is a clear uptrend in price. As I mentioned earlier, higher highs, higher lows, higher highs, higher lows, higher highs, right? This is a nice clear uptrend. And what we have here is consolidation. So you can see we're consolidating on price. So after consolidation, we really can only have one of 2 things. We have a continuation of the trend, which is this example. In the previous example, we had a reversal. So in this one, what we have is a nice continuation of the trend. And this is really that phase 3. So we went from phase 2 consolidation back to phase 3, where we now continue continue back towards the upside. So this is my personal favorite, is the continuation of the trend. A lot of the times when I trade, I look for higher time frame trades and I look for a continuation because that's when the break and retest works the best. Now let's see what this looks like on a chart. So right here, you can see we have a chart pulled up and we have a clear uptrend, as you can see, making higher highs, right? Higher lows, higher highs, higher lows, right? We're continuing towards the upside. So right here, this is phase number one. Now what we have is phase number two, where we have a lot of consolidation. And then phase number three, we have that nice continue push back towards the upside. So you can see this is what it looks like on a chart illustration, right? We have our three different phases, our uptrend, consolidation, uptrend once again. So with this being said, this is a pretty basic understanding of how price control works, understanding trends in the markets. Now let's go on to step number two. And step number two is understanding true breakouts. So we have two different forms of breakouts. We have a false breakout and we have a true breakout. Number one is a true breakout, and really a true breakout is split up into three phases once again. So you can see right here, we have a nice push towards the upside where we're creating higher highs, higher lows. You can see this is what's called our breakout structure. So right here, price creates a new high and we actually break above this key level on this candle right here. And this is what's called that breakout structure towards the upside, or a continuation of the trend. Once we have that continuation of the trend, what we're going to be looking for is now the confirmation of the breakout. And the confirmation of the breakout occurs when price pulls back down towards this retest level. So right here, if I actually change the color, you can see this a little bit better. Price breaks out right here. And this is what's called step number two, is when we actually have the breakout. And to confirm the true breakout, it's step number three, which is the confirmation and really the break and retest and the hold of this previous resistance that turns into support for this continued push back towards the upside. So now let's see exactly what this looks like on a chart. So right here, you can see I have a chart illustration. And the first thing that I'm going to do is mark out our key level of resistance. So you can see right here, this is a key level of resistance. This is the area that we broke down from. We have multiple touches in this general area. What are we going to be doing now is waiting for step number two, which is the breakout. So you can see right here, this is when price started to break out. And this is step number two, is waiting for that confirmation. Once we get that strong candle closure above our breakout level, our resistance, that's when we can be looking for step number three, which is our confirmation of the breakout and basically the hold and our break and retest that we're going to be looking for continuation back towards the upside. So you can see right here, this is step number two. And we also have our confirmation that price does want to indeed hold our key level of resistance, now turning into support for that continued push back towards the upside, as you can see on the overall market. So you can see this is step number two. This is also step number three, where we have this retest here, and now we continue back towards the upside. So this right here is an example of what's called a true breakout in the market. Now let's go on to false breakouts. So right here, what we have is a false breakout. As you can see, we're going to mark out our key level of resistance right here. This is what we like to see get above and hold above if we're going to have that continuation towards the upside. So the difference between a false breakout and a true breakout is really step number three. So right here, you can see step number two, right? We have that break towards the upside. And if we want to confirm this breakout towards the highs, right? Step number three is crucial in looking for that continuation towards the upside. As you can see right here, price actually rejects off this resistance level and we continue back towards the downside. So this is what's called a false breakout, where step number three, instead of continuing and holding above that breakout level, we're actually using that as resistance and we're looking to take liquidity above that level, and we're actually reversing back towards the downside. So as you can see right here, most of the things that I mentioned are broken up into three steps, and number three is crucial here. So instead of having that continuation above the resistance, we have a fake out and we actually start pushing towards the downside, back towards the low that we created from the original trend. So now let's go on to the charts and see exactly what this looks like. So right here, you can see I have a chart illustration, and the first thing I'm going to do is mark out this key level of resistance on price. So what we like to see coming into price is one of two things. If we have a true breakout, we like to see the break above this key level of resistance, use this level as support for this continued push back towards the upside. But you can see in this case, this is very key, which is step number three. And step number three shows that sellers are stepping in above this key level of resistance. So we never had a strong candle closure above this key level of resistance. We end up actually rejecting off this level and confirming that push back towards the downside. So this is a clear sign of a false breakout, is when you can see these upper wicks right around this key resistance level, and we're unable to have a strong candle closure and a confirmation that price wants to continue higher. You can see that once we actually got back underneath this key level, we ended up using this as a retest back towards the downside. So with this being said, let's go on to step number 3, which is understanding the different types of entry models that we can use for continuation and for reversals as well. So right here, you can see that we're on the entries, and what we have is a bearish entry model. We also have a bullish entry model as well. And these will be used in combination with key levels as well to understand if we're going to have continuation or a reversal at a key level. So in this case, what we have is our bearish entry model. So let's say we have a key level being our previous day highs, right? Price is pushing up in towards the previous day high. What we like to see is the first candle be bullish, right? We like to see this first candle push towards the upside. Our second candle have that reaction. So this is our second candle. And then our third candle in this case is our confirmation candle. And our confirmation candle has to close below its previous candle. So once we have a candle close below its previous candle, this is our confirmation that price is going to continue back towards the downside. So it's a 3 candle sequence. It has to be built up of these 3 candles, and it has to have this strict criteria to signify that we have continuation towards the downside. So right here on the right hand side, this is our bullish entry model, and we're going to draw out a key level. Let's pretend this is our previous day's low, and this is a super key area that we're going to be looking for a potential reversal in price. So this is our first candle, which is our lead candle. And we like to see price really push back in towards our key level, which in this case is our previous day low. Our second candle is basically our reaction candle. So we really want to see the reaction around this key area. And then our third candle is our confirmation candle. So once price closes above its previous candle. So in this case, this is our candle close, and you can see we close above its second candle. So the third candle in this case has to close above its second candle, and this is going to be our confirmation that price wants to continue back towards the upside. So this is the 3 candle sequence towards the upside, and this is the exact bullish entry model that I use every single day along with the bearish entry model as well. Now let's go on to a chart to see exactly what this looks like. So right here, as you can see, what I have is a chart, and what I want to talk about is swing highs and swing lows in the markets and the different type of pattern recognitions that we can look for a potential reversal in the market. So if I zoom in right here on price, and right here you can see I zoomed in right here so you guys can see this a little bit better, but what I have is this swing high. So coming into market open, we have a 3 candle sequence right here. So we can count the candles 1, 2, 3, and what we have is our first candle being our lead candle. So you can see price pushes towards the upside on candle number 1. Candle number 2 has that reaction. This is a reaction candle. And number 3 is our confirmation candle. So you can see in this case, our confirmation candle closed underneath its second candle. And this indicates that price is most likely going to continue lower. So you can see in this case, this 3 candle formation right here showed that this was our swing high. And you can see we started pushing all the way back towards the downside. Now you can see where price started to reverse. You can see this is actually our swing low in this case. So as you can see right here, we go from swing high all the way down towards swing low, and you can see where price started to reverse. Right, what we have is a reaction off of low of day. So I have this drawn out. We have our lead candle in this case, which price pushes towards the downside. We have our second candle, which is our reaction candle. And the third candle, what we like to see is price close back above its previous candle. In this case, price basically closed right above where the candle closed at. So this counts as a potential reversal in the overall market. And we have that continuation back towards the upside. And you can see price as it pushes back towards the upside, we have this swing high in the overall market. Similar thing here, right? We have our first candle, which is our lead candle, our second candle, which is our reaction candle, and then the third candle, which is the candle that confirms price to move back towards the downside. And you can see price closes back underneath its second candle where we have a mini reversal in price. And you can see we can keep doing that over and over again. And you'll see these 3 candle sequences will happen all the time. And this is exactly what I use on a daily basis. And the best way is to look at them at key levels. And I'll be talking about that here in a bit. And now let's go on to step number 4, which is understanding the candlestick speed / momentum. So this is step number 4, which is candlestick speed / momentum. And this is very important, especially when you're trading options and you need something to head towards an area very quickly. The key areas that I'm going to mark out is just this key pivot high. As you can see right here, this is a super strong area. Price really consolidates underneath this level. You can see price starts to speed up once we get above this key area. So this is really where we want to be trading options, in this key area when price delivers really quickly. You can see once once we start consolidating, this is really phase number 2. And when we have our reversal in price, this is when we start to speed up. So we can draw this once again. This is phase number 2. And then we have phase number 3, which is when we have our downtrend in price. You can see right here, when price breaks underneath this key level, this is when we have an impulsive move. So you can see price breaks underneath here very impulsively. And that's when we can expect momentum in the market, is this retest. And you can see once we have that retest of this general area, also this previous area as well, we have this nice reversal in the overall market, and price really starts to speed up towards the downside. And this is a great example of when to trade speed and momentum, is when we're trading around key areas in price. And key areas in price are always going to be previous highs, previous lows, multiple touches, and you can also combine that with time as well. Now let's go on to a bullish example. In this case, a bullish example here, what we have is a clear downtrend in price. We have our consolidation, which is phase number 2. And then finally, once price breaks back above, you can see we start having momentum towards the upside once we break back above our key levels. So you can see right here, we have our phase number 1, we have phase number 2, and when price breaks back above this key area, you can see we have our immediate retest, and we have this big push back towards the upside. And this is exactly where you want to be trading options, is when we have speed and momentum. And this really ties into my last point. I think this will explain this a lot better, but this is what's called the last leg of a move. So whenever we have speed and momentum in a stock, usually it occurs at the last leg of a move. So right here, what I have is all 3 phases. I have our downtrend, as you can see right here. I have our consolidation period, and then I have our reversal back in the overall market. And where does the best potential trading opportunities occur? The best opportunities occur is in this leg number 3, which is basically the last leg of a move. So you can see right here, as price pushes towards the downside, what we're going to have is a potential reversal in the market. Let's say this is our previous day highs. So we have our previous day highs reaction. You can see price starts breaking back towards the upside. So price breaks back towards the upside. This is what's called our change of character. When our change of character occurs, this is when a potential reversal can happen in the overall market. And if we're going to be looking to buy that first higher low off our key level, this could be very well choppy, right? Our first reversal could very well be slow in momentum because it's a reversal and it might take a little bit longer than you expect it to. And you can see these are higher lows in price, but the best area to look for a move in the overall market is what's called the last leg. And really the last leg is when price pushes towards the upside before we take out a key level in price. And this is when we're going to have the most momentum in a stock, is when we have that last leg before we take out a key level of liquidity. So in this case, this last retest that we're going to have is going to be the best, and it's going to have the most momentum on a stock. So you can see right here, price comes back down for the retest, and this is when we're going to have that super nice push to take out a key level above, right? All these retests below, right, are super solid as well, but you're going to have to hold through pullbacks. You're going to have to hold through higher lows and drawdowns, which is fine when you're trading futures and stocks where there's no Greeks. But when you're trading options, you want momentum. And the last leg of a move is what you want to capture when we're trading options, because we want to have speed and momentum. And it's going to gravitate to your major objective, which is going to be this key high in the shortest period amount of time. As you can see, this is the last leg of a move towards the downside, and it's split up into 3 phases. Once again, price is in a clear uptrend towards the upside. We have our initial reaction around our key level, and price starts pushing towards the downside. If we take a short right off our key level, our short can be super nice, but it might take a little bit of a while for price to push back towards the downside. But when we have that nice momentum, is that last leg before we push down back towards lows. So right here, you can see this is that final leg, and this really builds upon my step number 4, which is speed/momentum. Now I'm going to go over some examples in real time to bring this really all together from step number 1 to 5 and show you guys real examples on the charts and also some live examples that I took in real time. So let's get into it. So right here, you can see I'm on the Tesla chart, and the first thing that we're going to talk about is price control. So as you can see right here, we're clearly in a downtrend. We're making lower highs, lower lows, lower highs, lower lows, and we're continuing to push towards the downside. The second thing that we're going to do is mark out our key levels and understand if we're truly breaking out towards the downside. So right here, this is a key low. As you can see right here, we have a nice push towards the downside. And what we're going to be doing is looking for the confirmation if we're going to continue towards the downside. And you can see right here, this is the third leg of a move, and we're confirming this push towards the downside. So you can clearly see that we're in a downtrend on Tesla. And now what we can do is mark out our key level. So in this case, the key levels I can have marked out is this low that we created on the 25th. You can drag this over, and now what we can also mark out is your previous day lows as well. Now we can go onto a lower time frame and play out price. So you can see we're on the 5-minute time frame now, and coming into market open, you can see the previous day had a nice push towards the downside. Now what we're doing is having this nice pop coming into market open. What I like to see now is really the reaction that we have off of the 298 for this pop and fade for this continued push towards the downside. Just based off of the higher time frame context that I showed you on the 15-minute, you can clearly see that we're in a downtrend. So we're just going to be looking for continuation lower, really off this key level, which is going to be this 298. So as we play the tape here, as you can see right here on Tesla, you can see that coming into market open, we have now the first 15 minutes played out, and you can see the candle formation that's happening on Tesla. We have a 3-candle formation that I talked about as our entry pattern. What we have here is our lead candle that pushes towards the upside. We have our second candle confirming that sellers are stepping in off our key level in this case, which is our 298. And now we have our third candle, which is our confirmation that price wants to head towards the downside. You can see we have a candle close underneath its second candle, and now we're continuing towards the downside. So now we can go on to the lower time frames to look for potential entries on this name. So now I'm on the 1-minute time frame on Tesla. The key level I'm going to mark out in this case is going to be your 1-minute opening range. And now what we can be looking for is really the retest off your 1-minute opening range for this continued push towards the downside, towards your previous day lows and below on this ticker. And you can see that Tesla is having a nice weak reaction off of your 1-minute opening range. You have multiple reactions off this key level, which is your 292. This is where I personally go in short, and I have a stop just to break above this key level. And now what I'm going to be looking for is continuation towards the downside. So I'm going to be looking for low of day, and I'm also going to be looking for your pre-market lows, which I can drag this out. And then in this case, I have targets way below, which I'd have to look all the way down to the left on this name. So now we can play out the tape. And right here on Tesla, you can see I basically just combined all 5 price action concepts I just talked about in this video. We talked about the price control on the higher time frames. We had a true breakout towards the downside. We had our entry model, and then we went on to the lower time frames to look for a 1-minute entry. And then we really had that nice momentum towards the downside because we had really that last leg of a move, which was to target your previous day low. So you can see right here, we had a nice push lower, but really that momentum came in on Tesla once we had that last leg towards your previous day lows. Now let's go on to the live session that I have for this day to show you guys exactly what I was looking at in real time. At least coming into the morning right off the bat, what I did want to see was a pop and fade off of this key area, which is your 299, 300 on Tesla. It seems like it is pushing down right off the bat. So similar to yesterday, almost the exact same thing is setting up. I'm interested in Tesla if it can have that pop back up towards that 299. We could be looking for the fade off this area. Since we aren't going to have any gap fills, we're going to have to wait for some sort of pop here on Tesla. If it kind of drops right off the bat, potentially you could be looking for another setup for a move down towards your previous day lows. But the best case is if it pops up and towards this 298, 299, you could be looking for the fade off that level. So you can see right there, this is basically my pre-market game plan coming into market open. As always, I talk about my pre-market game plan on YouTube at 8 a.m. Eastern Standard Time every single day. And I also lay out for the community as well. So as you can see right here, the game plan was the pop and fade off of 300 for this continued push back towards the downside. Yeah, all right. I just picked up some of the Tesla, the 290 puts, 625 average on this one. I have 20 contracts. Risk is just going to be a break above this, really the 291 pivot point. I want to see the Qs drop here. Tesla most likely going to close underneath. I like to see this push down towards previous day lows. So right there, you can see I just entered into the 290 puts on Tesla, looking for continuation towards low day and below. You can see Tesla having a nice little reaction off this 292, showing that sellers are stepping in off this general area. This is where my risk is, and I'm looking for this continued push towards the downside with the QQQ also showing weakness as well here. I'm expecting the overall market to head lower towards the lows. Yeah, with Tesla here, it has to stay heavy with the Qs dropping here. This is your previous day low, so you like to see this flush down. If not, if the Q starts flushing and Tesla holds this, then it's most likely just to come back towards 290. So market's dropping here. Tesla, you'd like to see the drop underneath your previous day lows here. Yeah, we should get that continuation lower here since Tesla broke underneath, at least on the 1-minute time frame, and the Qs, you can see this nice drop as well. Qs down towards your previous day lows, next level SPY actually just filled this gap, so could have a little bit of reaction here, but Qs, the next level is going to be 511. As for Tesla, this now make sure to scale in towards this key area, and then your next level is going to be this 286 pre-market lows. Yeah, this is the exact level, 285 and L5 levels, Qs low day here, and then Tesla, the next levels on Tesla, yeah, I don't really have any other levels down towards your 279, and then the Qs right now kind of in this free fall, down towards its previous day lows, just took out your previous day lows here on the Qs. Yeah, that's 10 o'clock right there as well, so basically flush into 10 o'clock on the overall market, no signs of buyers on anything so far, just complete free fall within the first 30 minutes of market open, Qs, SPY. As for Tesla, this one,
We can just bar by bar. Now we're already right. Even bar by bar it, you can see not a single up close candle.
So right there, you can see Tesla end up having a super solid push towards the downside with the QQQ as well. We end up having that nice extension lower. Tesla, super solid entry. And as soon as we entered, it really just started pushing down towards the lows. I end up scaling along the way and then end up cutting the rest of my contracts later into the day, but end up being a super solid trade. And now let's go on to the next example that I have for us today. So right here, you can see this is my second example on Tesla. This was a few days later, and you can see we're still clearly in a downtrend on the overall markets. If we look at the previous 3 to 5 sessions, you can see that Tesla is continuing to push towards the downside. So we are having continued breaks towards the downside on Tesla. The higher time frame is bearish as well. So we have the first two checked off. Now what we can mark out is key levels. So if I zoom in just a little bit, the key levels that I'm going to have marked out coming into this day is going to be one, this low right here, which is your 273.60. I'm also going to have marked out your previous day lows as well, which is your 277.33. So coming into market open, as you can see, the previous day, we have a nice push towards the downside on Tesla. We're showing some weakness coming into the pre-market. So what I'd really like to see is a retest of your previous day lows for this continued push back towards the downside on the overall market. So now I can go on to the 5-minute time frame. So as we play the tape coming into market open, so right here you can see that Tesla, we have the first 3 candles played on the 5-minute time frame. We have this nice push towards the upside. We have our rejection, which is our second candle right around your previous day low. So you can see that the sellers are stepping in off of your previous day low, which is this 277. You can see our third candle, which is our confirmation candle, that price is going to continue down towards the downside. So you can see price close underneath its second candle. Now what we can be doing is looking on the 1-minute time frame for pushes back towards the downside. So you can see right here, I have the 1-minute time frame played out on Tesla. And now you can see what we're going to be looking for really is the retest off of your 273 for this continued push back towards the downside on the overall market. You can see right there, we have that nice reaction off of your 273. This is where we can get in with a stop just a break above. And what we can be looking for in this case is a 1 to 2 risk to reward ratio towards the downside. Now we can play out the tape. And really, as you can see there, we had a nice push down on Tesla, really combining all the concepts that we talked about. I'm going to show you guys the live example that I talked about as well and show you guys that I did take this trade in real time. For Tesla, as you can see right here, the key level that we have marked out is our 275. We have this daily gap all the way back down towards 255. What I like to see is really the retest off of your 275, which coincides with basically your previous day lows and your Friday's lows as well for a continuation lower. It does seem like it's heading down currently, so I would still like the pop coming to market open. So right there, you can see I talking about Tesla, similar setup as a week ago. All we've been doing is looking for pop and fades on this name. So Tesla key level is going to be your previous day low, really coincides with your 276 as well. So as long as we pop and fade, maintain underneath their 278, I expect this to continue back towards the downside on the overall market.
Not sure when my trading view charts on, but yeah, Tesla here. Watch out for the 265s. If you can have a weak candle closure, we can use basically your 275.62 as risk now. If we have a weak candle closure underneath this 274. Yeah, right. I got some of the Tesla, the 265s on Tesla. My risk in this case is going to be this 276. I will look to add on most pops here. So rejected off of its previous day lows, and now with the Qs dropping here as well, I do expect Tesla to head down towards its opening candle range low and then potentially lower on this name.
So right there, you see, I just took the 265 puts. In this case, my entry model was a little bit different than usual. What I was looking for was a break back underneath this opening candle range on the low. The reason why I was doing that, and it was a little bit more aggressive on this entry, is because a lot of the times towards the downside, you have to be a little bit more aggressive because it doesn't always come back for the retest. So in this case, what I was looking for was a break underneath 273 because I didn't want to miss out on the trade because I knew there's going to be a great opportunity on this one. So there's 3 different entry models that I talk about. There is the previous day low retest, there's a break underneath, and there's also the retest as well. And you'll see it actually came back up to retest. So it had a nicer entry than where I entered at, but it was really the exact same thesis for continuation lower on the overall market. So right here, you can see I have that 274 marked out. I came back to retest this general area. You can see that the sellers are stepping in. You can also see, right, nice kind of 3 candle formation right off this key area. So now what I like to see is this nice drop on the overall markets for this continued pushback towards the downside on this ticker.
Tesla, we like to see this drop here with the Qs. If we can stay heavy underneath 270 now, this one should head down towards 265. Qs, if we can make a new low here as well. Seems like it is weak SPY just made a new low. Qs is about to make a new low if we can here. We like to see Qs break underneath this 492, and then Tesla we like to see stay heavy underneath 270.
So right here, you can see the Qs kind of in the middle of the range. Tesla's underneath this opening candle range on the 1 minute time frame. We're coming into 10 o'clock as well. So what I like to see is really the hold underneath this 270 for this continuation back down towards 265 on this ticker.
Basically, within the next 2 minutes, I'd like to see the SPY Qs drop here, coming into 10 o'clock here. Yeah, there's that 10 o'clock too. See, look at that time. All right, nice push lower here on the Qs, right at 10 o'clock as well. Tesla coming down towards the 265 is a key area. Contracts now. Make sure to scale here with the Qs flush now. Super solid.
As you can see right there, super solid trade on Tesla. Qs, nice reaction off 293. Tesla, nice reaction off 274. Hold underneath 270 as well for this continuation right down towards my key level, which is your 265. All we've been doing in this market is looking for pop and fades on Tesla towards the downside, and it's been working. It's reminding me a lot of quarter 1 back in 2022, where there's nice volatility on this name. But with that being said, I hope you guys did enjoy that video. If you did, I appreciate if you guys drop me a like and sub, and I'll see you guys next week for a brand new video. Peace.